This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Oil prices edged higher on Tuesday, spurred by worries about political instability in Russia and possible supply disruptions, as well as U.S. demand hopes ahead of the summer driving season. By 0613 GMT, Brent crude futures had climbed 67 cents to $74.85 a barrel, while U.S. West Texas Intermediate, WTI, futures rose 73 cents to $70.10 a barrel. On Monday, Brent had climbed 0.5% and the WTI 0.3%. A clash between Moscow and Russian mercenary group Wagner was averted on Saturday after the heavily armed mercenaries withdrew from the southern city of Rostov under a deal that halted their rapid advance on the capital.
Saudi Aramco believes market fundamentals remain sound for the second half as demand from emerging markets led by China and India will offset recession risk in developed markets, CEO Amin Nasser told an industry gathering on Monday. But other executives at the Energy Asia conference in Kuala Lumpur were divided, with Malaysia state oil firm Petronas reporting a slowdown in demand for petroleum and petrochemicals in the second quarter and growing refinery capacity putting pressure on the market. Overall, we believe that oil market fundamentals remain generally sound for the rest of the year, said Nasser, who heads the world's largest oil company.
Moving on to the top news in the energy sector.
Russia's oil exports were uninterrupted throughout the short-lived mutiny led by the head of the mercenary Wagner Group Yevgeny Prigozhin last weekend, according to Refinitiv Icon shipping data and 3 traders. Prigozhin halted an abrupt advance toward Moscow on Saturday. His fighters briefly seized the capital of the southern region of Rostov, which is crossed by several oil and gas export pipelines. Oil loadings from Russia's ports as well as via pipelines to the eastern and western destinations were all on schedule, according to Refinitiv data and 3 traders familiar with the shipping data.
The U.S. Department of Agriculture will spend $450 million to expand the production and availability of transportation fuels that are blended with higher volumes of biofuels, the agency said on Monday. The Biden administration sees the expanded use of lower-emission biofuels as critical to decarbonizing the transportation sector. The Environmental Protection Agency last week announced the highest-ever targets for a federal program that requires oil refiners to blend biofuels into the nation's fuel mix, though the targets were lower than the ethanol industry had expected.
Next, we have the top news in metal markets.
Commodity prices will have to rise to attract investment from ever more complex locations to meet the urgency of the energy transition, Anglo-American CEO Duncan Wanblad said on Tuesday. Speaking at a mining conference, Wanblad said commodity price forecasting was a mug's game, particularly in the short term. However, with mines in ever more difficult locations, long permitting times, growing costs and rising demand, the current price environment would eventually have to change.
Dalian and Singapore iron ore futures climbed on Tuesday, as the prospects of further economic stimulus from China and active post-holiday restocking in some mills boosted trader sentiment. China will roll out more effective policy measures to expand domestic demand, Premier Li Chang told delegates at a World Economic Forum summit in Tianjin. This statement came after China's National Development and Reform Commission held a meeting on Monday in which it encouraged financial institutions to expand the issuance of medium and long-term loans to the manufacturing industry, lifting sentiment to some degree, according to analysts. We will now look at the top news in the agricultural sector. Malaysian palm oil futures rose on Tuesday for a third straight session, supported by stronger rival oils, a weaker ringgit and slow production. The benchmark palm oil contract for September delivery on the Bursa Malaysia Derivatives Exchange gained 18 ringgit or 0.48% to 3,737 ringgit, $801.76 per metric ton by the midday break. The ringgit weakened 0.19% against the dollar, making palm more attractive for buyers holding foreign currencies.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.